Hi, good morning, everybody. Welcome to Trendy Trading. Let's go ahead and get started with our broad market analysis. A few updates, though, before we get started. I added a new channel here, and that is so you can see the results of the neutral strategy, right? And you all know that I keep those in here, and anytime you want to see them, I'll be happy to send you that chart or those levels, and you can go back and look. Also, I gave the charts yesterday on Saturday, and they have links. All right, so if you have Thinkorswim, you just click on that link and it's going to put this neutral strategy and the levels, the targets to the upside and the targets to the downside on your chart. Now, for some reason, if you click it and you don't see anything, you just simply right click on your chart and hit auto zoom, and that's going to bring that chart up for you. Now, this week we're going to be covering October 17th tonight into the 21st of October. We do have quite a bit of earnings coming up this week, to include some big names: Johnson and Johnson, Netflix, Halliburton, Anthem. I mean, I could go on. Tesla, Snap, and so forth. A lot of different things reporting this week. All right, so welcome. We're getting into one of the busiest times of the year. I love it. The market's pushed up. It's been really strong for the last several sessions, so that's important. All right. We may be looking for a little bit of digest period for the first couple days as we get into these bigger names reporting. Okay. So again, don't forget to go to the new channel so that you can go back and look at those results. And then right now, I'm going to go over one more time with you how you trade this. Remember, this looks simple, but it's actually derived from Fibonacci, supply and demand, trendy edges, and the overall trend. All of these you could see on our chart here. Remember, your trendy edges are to the downside and to the upside. Basically, what you're looking for is demand or support at this level, and you're looking for this to be supply or resistance at the upper levels. We have 3 or 4 sets of different trendy edges. They all are for different types of traders. We have the yellow, which is weekly. This is what I look for intraday to 3 days. Okay, so you should see results during that intraday to 3 days. Then we have the pink set. Okay, the pink set is more of a swing trade. All right, and I'm looking somewhere between 1 to 3 weeks, maybe even a month for those pink levels. And then the blue ones, which you'll probably see here on the monthly chart towards the end of the broad market analysis, is our yearly edges. Okay, and our yearly edges are more for the longer term trader, even a leap trader. And again, we could trade equity or options or futures off of these, which I do all. Okay, and then we have what's called the DE, or the daily edges. And this is for my scalp traders, or when the market is moving sideways, we'll use the daily edges. Okay? Remember, it's really simple though. To the downside is support, to the upside is resistance. Each one of these charts, we're going to have a neutral strategy. Not all of these are tradable. Like, we're not going to trade the TNX or the dollar, okay? But for your SPYs, the Qs, DIA, IWM, gold, TLT, ES futures, NASDAQ, oil futures, Bitcoin futures. I prefer micro Bitcoin futures if I'm going to trade. Okay. And then we're going to go over the SKEW, the PCALL, the VIX, and the Fear and Greed Index. We're going to put all that together, and I'm going to give you this analysis for this week. Again, I'm not taking into account anything outside of technical analysis. I just don't need it. Remember, news is a catalyst that moves price to a trendy level, period. Let's go ahead and get started here. So up here, first things first, we could see that the trend is, and now monthly, yearly, and the weekly are extremely bullish. Some things to note here on the weekly: price is back above this 9 EMA. And if you remember, and I'm sure you do because we've been going over it every week, that this entire year the markets like to stay above this 9 EMA cloud. Now, guess what? We're right back above it. Also, one thing to note here, very important, we have the inside and up formation, and we are looking for this upper target here at 451.19 as soon as we could take out the 447.29. Which brings me into my next point. How do I trade this? Well, if price breaks over the neutral over 447.29, again, I'm looking to go long into 451.05. Remember, looking at risk for if I wanted to swing trade this, my risk is the difference between this number and this number down here below. The upper targets are my reward. Now, again, this would be on a swing. So let me just show you an example. If I wanted to swing this into Friday for the week, once price breaks there, I'm long. Stops are below the 442.79. What about the intraday though? Well, the intraday is a little bit different, and I want you to take your eyes over to the daily chart, which is over here, and you're going to see that there's a trendy level here. Okay? If for some reason price breaks to the upside, my stops would go under here or where I'm comfortable. Comfortable, okay, may not be here for some traders. Comfortable might be, hey, as soon as it breaks 447.29, I'm long, and my stop's going to be just underneath here where I'm comfortable. Again, I like to trade several, so if I'm pushing up towards here, this is definitely where I'm looking to trim or close. And then once we pull back here, I want to see that we can at least hold about 30% of this rally. If we can hold it there, then I can add above the trendy edge, which again is around 451.20, and then I can look to trim into these targets above. Now, for some reason, let's say that we gap up tonight. Let's say that we gap up into the 447.29 level. Anytime price is at any line above price, it is sitting at resistance. And we got to showcase this and coach this almost every day for the last 2 weeks because the market, the futures kept pushing up and it would push us right into resistance, catch bulls off guard, and then they would dump it towards the end of the day. So very, very important to understand if you gap up into one of the trendy levels, look for resistance on open. And again, I'll be here to coach that in the morning. Now, what if we gap down? All right, that's a different look. Let me go ahead and show you. Because the overall trend is green across the board, meaning extremely bullish, if for some reason we gap down into a trendy level, let's say that we gap down into 442.79, then we are opening into support. And again, I'll be there to coach that. There'll be certain levels that I'm looking for to hold, basically 442.79. And I may be buying lower on the curve. So if we start to go bid, meaning buyers step in, then I'm trying to actually go long lower on the curve. And then my stops are underneath this. Again, let me reiterate this. Because the overall market is extremely bullish, any sort of pullback into a trendy level, I'm looking for this to be support. This above, resistance until proven otherwise. All because, very important, the overall trend is green. All right, and as you can see here also, folks, for our members, AC/DC equals ME. It's pretty straightforward. Accelerator, decelerator. As long as price is holding in here, we are looking for this, and we do have a high probability of that target being met. All right, let's go ahead and move on to the Qs. I won't go over it as in depth as I just did for the SPY, okay? But you understand how I trade this. Let's go ahead and move on. Into the QQQ, this thing's looking good as well on the weekly, folks. We do have a monthly neutral, yearly extremely, and weekly extremely bullish. We are back above the 9 EMA, and just like the SPY, we did go inside and up. Also notice that the trendy edge held very well this past week. And before I move on, that is very important for you to note here as well. Not that you didn't know if you were in here how well that trendy edge works. I just want to go back and show you. Okay, so back on the Qs, again, we're above the weekly cloud as well. This is a positive, and as long as price can hold about 366.44, I'm looking for that next move into 372.94. Now, because it's in neutral, again, I might have not said this on the last one, if price is in the neutral, most of the time I'm not doing anything. I'm staying neutral, just like it says. Okay. If price breaks over 370.65, I'm looking for that move into 72.94, 374.98, 376.46. Now, the ultimate target here into earnings, such as the big players, Amazon, Apple, all that fun stuff, I'm looking for 379.88. I would expect some resistance up there. If we break through it, sure, we'll head to all-time highs. But for now, that is my max profit gain here at 379.88. Now, for some reason, if we break down to the downside, I think because overall the market is bullish, I'm looking for these lower targets to be support. So, do I really want to go short into this week? Not necessarily. If anything, if we were to gap down or move into a target, I'm actually looking to add into my longer term trades, or I'm looking to go long at the lower levels. Let's go ahead and move on to DIA and IWM. All right, so this one is a little bit different, right? But it gets to showcase how important these trendy levels are. And you can see that by looking at the Dow Jones. Last week came into the trendy edge and then pushed up. We went inside. And this past week, we made a higher low and we got that buy signal once price went over that inside candle. And just like the ACDC equals ME. We hit that ME to the tick. So I would expect a little bit of pullback here, potentially. Okay, we'll just see how the market opens tonight. But same thing. All right, as long as we're in the neutral, I'm not looking for anything. This one has a different look. The Dow Jones could be pulling back a little bit. Look for 351.60 by 350.5 to hold. And once again, if we stay above the weekly cloud, I'm looking for price to continue to move to the upside. Now, inside here and down. So price moved right into resistance on the close on Friday. Very important for you to understand that. Again, this would suggest the probabilities of the Dow gapping down or just kind of sideways action tonight is pretty high. And of course, I'm a bull, so if we break over it, good. Then I'm again long above the 354.24 into the upper targets here to the upside. The overall trend you can see here, all three banners are green on all time levels. So therefore, I am extremely bullish, but a little caution as we closed into resistance or into supply. Let's go ahead and move on to IWM. We had this trade, and just like the trendy edges suggested, I got out of my trade here at the ME, which worked very, very well. Remember, upper levels, upper edges are resistance until proven otherwise, and lower levels are support. Notice price did move back there. This is a new blueprint, and this is what it looks like. If we stay in the neutral, just let it mellow, right? If we move back above 225.24, look for targets 227.03 and possibly back up to the trendy edge around 228 and some change, and you can see that bubble there to the right hand side. Overall, the monthly, the yearly, and the weekly are extremely bullish. Things look pretty good, and of course, on all of these, don't forget to look here at the monthly ATR. That kind of gives you an idea of the move that we could be seeing if we can finally break out of this channel. All right, and it's pretty sideways action. You know, if anything, I'm almost tempted to sell credit spreads up here around the trendy edge right here, or even sell calls naked, depending on how we open up tonight. All right, so we'll see. And again, overall, we are three banners green, and this is my trade plan for IWM. Let's go ahead and move into gold. We also had a gold trade this past week and did very well. All right, and we sold it right in time. And so that worked out. The first thing I notice, and you should notice as soon as we open this up, is that all of the banners here are yellow. All right, so you have the weekly. We had a pretty bullish week last week in gold, but overall, this is a neutral trade, and because of that, I'm not very convicted on a long-term trade here because every time we push up, it's rejecting at the cloud or at a trendy edge and so forth. And you all know that. I mean, you can see the sideways action that we've had for the last several weeks. So because of that, my trades in gold, I'm thinking right away it should be intraday to just a couple days. And the only way that I'm going to hold gold overnight is if when I enter a trade, it makes me enough money to make me feel comfortable to trim some and then keep some. All right. But right now, overall, definitely neutral. Yes, we're coming off a bullish week, but notice how we dropped. You almost can't see this guy. I need to open this up a tad. But this candle actually closed all the way back down. Okay, so targets to the upside, if we start to move back above here, notice that the 166.23 is confluent not only with the cloud, but also there is a trendy edge under there. So see how when I hover over there, you can see that. So we are under quite a bit of resistance. All right, again, overall neutral. That is my sentiment there on GLD. All right, TLT, so the bonds, what are we looking at here? This is a new blueprint, so awesome. This candle here is in the neutral for now. You can see also on Friday we pulled back quite a bit. We're still in the cloud. When you look at the banners, this should definitely really stick out like a sore thumb. But overall, this is a bearish to neutral play. Last week was bullish, but then ended on a sour note there on Friday. So overall, neutral for me. I trade this the same exact way if I take this trade. Targets to the upside are resistance until proven otherwise. Levels to the downside, these are targets for if I'm going short. Okay, this is a little bit different. So unlike the SPYs and the Qs, I'm not necessarily looking for support down here at the lower levels. I'm really more interested in shorting and trimming at these lower targets. Okay. All right, so the TNX or the Treasury, this is something that we just watch. And we have a new blueprint here. And so it did go inside on the week. As things started to pick up momentum here, we did see the market pull back a little bit, which was expected. You can also see we're just going sideways here. I would expect resistance at around 16 by 16.22, and by the end of the week, just kind of hanging out here in the neutral. Now, if for some reason we start to bid above the 16.22 and work our way up to 16.70, 17.31, I would have some caution in the overall market. All right, but if we do indeed start to go ASK to the downside, I'd find support at around this 1460 by 1480. And again, that's the Treasury. Let's go ahead and go over to the dollar. The dollar's been pretty strong. And I think I heard, some sentiment out there, hey, the dollar's going to be really strong and the market's going to go down. I just want to reiterate during this whole entire time, as we coached through this pullback in the market, we expected the market to pull into and create range for earnings. That's how I look at it. It almost happens every quarter, but we find some sort of catalyst that helps traders, or I wouldn't say helps traders, actually puts traders off, puts them in that deer in the headlight syndrome where it's hard for them to execute. But really, when you think about it, the market just kind of created that range so that we could trade it into earnings. So thank you, market. We appreciate it. The dollar is not necessarily, extremely bullish here. Matter of fact, if you look at the bands across the screen, we have a monthly that's been bullish. Yes, I would agree. It's been more bullish this past month. But overall, for the year and the week, it's still bearish. All right. And you could see here on a Fibonacci standpoint, that 38.2 is very, very important, folks, because when the dollar was at its highs here, you could see that it's still in this bear channel. So until it can break, the dollar can break above 94.5, I believe that we go sideways to down. But I do agree that right now it does look bullish on the month. So if anything, I would create an alert there above this 94.5 level. And if we break that, just be cautious. Yellow flags are waving, okay? So just think about that. And I would put that same alert there for the 38.2. Let's go over here into the SKEW. So these are your hedge funds. And your hedge funds, basically, they're talking, these levels here really help, okay? And I like to write in here and annotate what I would expect during these levels. And because the SKEW pushed up, hedge funds are saying, hey guys, a little bit of caution here. The market's had a big run. Give it a little bit of breathing room, maybe a little digestion period, and try not to lay on a lot of risk. Your risk should come as the SKEW lowers. And basically, if I were to put a SPY chart in the background, what you would see is that as the SKEW is down here, the SPY is moving down. And basically a lot of fear is happening. And this is where I actually want to have risk on. I want to be buying that fear as long as prices are at the trendy levels. And as the SKEW picks up, what they're saying is just pump the brakes. So again, I'm seeing a lot of different things in the market that are suggesting that we could see a slight pullback or just a digestion period, like a chop session. All right, and chop is really difficult, so I want to be thinking iron condors. I want to be thinking credit spreads, put credit spreads, call credit spreads. Okay, and try to lay off too many directional trades that could get hit if the market wants to digest for a couple days. It'll just basically kill that premium. So I like to think about, like, well, what does the market, how can it take your money? How can the market take your money? That was Aspen, by the way. And when she barks, it's usually a bullish sign in the market. All right, so how can they take our money? Well, if you think about it, the market has been really bullish the last several sessions. Why not gap it up on Monday? Let retail buy the gap up, right? The euphoria, pay that premium on open, okay? And then all of a sudden pull it back, chop it for the next 2 days or so, and no matter what, you're still losing money on those options. So again, I'm really leaning towards a credit spread type of week. And the awesome thing about spreads is you can manage them and use that in your advantage if the market starts to move in the direction you want it to. But again, those are things I teach here at Trendy Trading. So I would suggest that, if you're interested in spreads, reach out to your broker. I just like to use my levels for them. All right, so going into the PCALL, I'm not going to talk much about this because honestly, for the entire year, to me it's been off. But it's suggesting that basically your participants in the market are long. So a lot of people are jumping on the long side. It's at 0.59. It was on the day, and you could do a 9 or a 10-day moving average and come up with an overall number. Sometimes that works a lot better than just looking at it day by day. So just something to think about. All right, but again, right now it's suggesting that we should be thinking about the put side for further out, further dated puts. Okay, that's what it's suggesting here. So again, another yellow flag. Just want to point those out. Next one is the VIX. I use trendy levels here, the neutral strategy. Makes it pretty straightforward. And if you know that, basically everyone's always saying, hey, over 20, be cautious. And you can see the trendy edges here and has been there for a year. So we already know that. But as long as it stays in the neutral, we could see the market just kind of sideways to melt up a little bit. So, create your alerts maybe above 18. I think if it starts to bid above 18, have a little bit of caution, wave that yellow flag one more time. But if it starts to pull back, I would expect the market to have some volatility around this 14 level if we were to get there. Okay, or again, if we start bidding above 18. All right, so ES futures, we look at this a bit different. And that is that I'm going to show you the monthly on the left-hand side, and then on the right-hand side, I'm going to show you the weekly. Notice that over here it says October weekly, and on the left it says 2021 outlook. So I use the ES futures to guide the entire market. And it's worked for several years now, and it will work for as long as I trade. And I really have this dialed in. And I just want to show you guys a couple things here. So your candle here the previous week was pretty bearish, right? And a lot of traders were a little scared with this, but overall it was actually still holding a very extremely bullish trend on the year, and that's all I'm focused on. All right, so we had a little bit of a flush low, and then so far this month we're actually above the 618. And if you know anything about the Fibonacci, your 618 is your golden level. Okay, and basically we're back above into that uptrend as long as we stay above 618. So this is kind of a big level going into this week, but also for the month. So at the end of October, if we can close above 44.40, that's a really bullish sign. Now we're looking for on the month 44.82 and possibly 45.17. Now over here on the week, I put together this blueprint for our members way in advance, and that's how we do it here. We don't wait for the day of. We push out our blueprints in advance and trade those. So in the green box, we look to go into the red box. Here we are, right into the red box. So anything can happen here, and I like to call this the bear house. And as long as price is in supply, they can at any time pull that rug, right? So just be careful. On the week, what I'd really like to see is that we can hold this decelerator down here at around 43.91. All right, but also very important that we just stay above the weekly 9 EMA cloud. Okay, just like the SPY that I was showing you earlier. Inside and up, it is suggesting that we could see a move towards 45.20 and a half. So good luck there. Again, I'd love to see it stay above the cloud, which is roughly around 44.22. All right, so moving on, we're going to take a look at the NASDAQ futures. Once again, the monthly and the weekly, I did move this level. Okay, and I hate to do that. I hate to move any of my levels, but it worked. You know, we came up to that level before, we couldn't hold that level, and then we pulled back. What I want you to note here is we are inside on the previous month, and we are holding the 9 EMA. Notice we have the inside and up here. So if price were to ever come back into these levels around 13.9, I would be a buyer down here. All right, that's the bigger picture. You can see there's a green box down here and a red box here. We could see towards year end, if things really work out, and most people are not looking for them to work out, I would expect somewhere around 16,508 all the way up to 17,770. Again, we need to get past this pivot first. But for right now, things look pretty decent. Just remember, I have my buy zone down here, and I have my projected move up here. Now, what about the week? Here we are again, green box, red box. And I pushed these out in advance, and as you can see, the NASDAQ futures are holding the trendy edge. And we're looking for that next move to the upside for the week. All right, very important. So up here around 15,186 or so would be my next target, and then we would hit that red box at around 15,277. Again, just like the ES futures, I want to see the candle hold above the cloud and at or around 15,050. Let's go ahead and move on to oil futures. I've been extremely bullish with this. The blueprint has worked out very, very well. We were expecting 82.87. You can see we got there pretty close anyways. This was very nice from the neutral. Listen, I gave this trade at $68. You guys can do the math. Every dollar is $1,000. Every penny is $10 on the oil futures. I have traded this in and out this year. We did a live trade just last week where I showed you how fast you can make money on this. And for our Trendy members, you know, we use the intraday or the nightly buy indicators to get long, and we use the line in the sand, all that stuff we teach here. And if you have any further questions, you know where to find it. It's on your dashboard on the website, and if you still need more help, just reach out in the room and ask those questions. The monthly looks great, but I would say that it's been pretty powerful. As much as I like to make money over here, I hate going to the gas station and spending as much money as I'm starting to spend on, you know, whether it's boats, jet skis, or cars. Things are getting expensive, right? It makes you think about a Tesla just a little bit more. Over here on the right hand side, on the weekly, look how extremely bullish this is, folks. We're getting a little extended here from the 9 EMA, but listen, I'd expect a little bit of a digest period in the market. But again, I'm extremely bullish. So when I say that, you know, this is the level I would expect oil to hang out in, 82 by 81. All right, 82.37 by 81.06. But if they want to keep it above 82.37, you could see 83.73, where I'd expect some resistance. But overall, what I'm looking for is 90 by 93.31. Again, these levels are just for the week. If price were to pull back into this green box, I would be a buyer in here on a reclaim. I won't go into too much detail, but we'll go over it if price does pull back to there, okay? All right, on Bitcoin, I like to trade micro Bitcoin, just being honest with everybody. If you come over here, just to give you an idea, just to leverage a Bitcoin futures, it's coming in at or around $112,000 per tick. It's 25 bucks. It's a lot different on the MBT, so backslash MBT, but same chart. So if you don't want to risk, you know, or leverage 112,000 or use that in your account, you're actually you're leveraging more than, I apologize. It's costing you $112,000. Yeah, I just prefer the micro. But let's go over the chart. So I sent this chart out in, I don't know, probably February or April or something like that, or March. And it's worked out very well. We actually shorted from here. We look for price to come down into the green box. And then my coaching in the room was, as long as price is in this green box and holding, and you have to respect the candles, folks. This is a monthly. That means you can't say that it's not holding the green box on a swing if the monthly candle hasn't closed yet and you are respecting that monthly candle. Same thing over here on the weekly, folks. So you can't say, okay, that this green box, if it dipped under just for a moment, the candles weren't closed. See, at no time did candles close underneath the green box. So we look for the green box to hold, and then we look for price to move up into the red. And I coached this very, very well, and I hope you did very well. And because of that, we have opened up a crypto channel, and I love seeing all of you in there to talk about your trading in crypto, and I highly encourage it. I'm just so happy for anyone that's been in crypto and is able to take this ride. Once we do get over the 65655 level, I will be creating a new blueprint, but for right now, we are in the red box, and at any time they could pull it, right? So that's just something to think about. If we start to break out above, look for 71,523. All right, so to sum it all up, the market has been on fire for the last week or so. We could be looking for a digest period as we come into earnings. Okay, very important to understand that. The fear and greed index is at around 51, which is neutral. That means basic. I don't like neutral. I like extreme fear or I like extreme greed, because at those levels, that's where you start making a lot of money. When we're in the neutral, it's kind of like what the neutral strategy says. You just stay neutral. Think about credit spreads until we pick a trend. So very, very important to understand that. Now, as far as market watch goes, on Monday we have industrial production, capacity utilization. On Tuesday, building permits, housing starts. Wednesday, beige book. And then on Thursday, something you're probably more familiar with is going to be your initial jobless claims. And then your PMI on Friday as well. So, not much going on. It could be pretty, quiet per se for the first couple days. Like I said, maybe a digest period. All right. But if we gap up, that's awesome. That's great for us, right? So, in my account, again, smaller account, I'm almost at cash there. And in the bigger account, I'm at around 8% or so allocated, maybe closer to 10%. I'd have to do the numbers. But feel really good coming into this week. Again, lots of earnings. I'm really pumped up about that. And just really quick, before we finish this session, I'd like to remind everybody that we are working hard in the background, our development team, working on our scripts here in TradingView, and I am getting used to this. So I'm trying to get used to it is what I'm saying. So I'm not a master in this, but notice that the edges are on here, our buy signals are on here, our sell signals, your overall trend, and guess what? Even the line in the sand can be looked at on any time frame. We are currently working on the last script, which is going to be the PMZ, and once that is up, then we'll have more details to follow. But I love this because things happen very quickly here. But not only that, you can go back and study the important stuff, right? So for example, here you can see we like to buy at the trendy edge, right? So this is the trendy edge. We know that resistance comes into the upper levels, and you could see this. But a cool thing that you could take the time to do is they have this nice little replay on here, and so we could replay this. So I just click this button right here, and then just in case you're into this type of stuff, it's fun. We hit the play button, and you can watch price as it comes into the trendy levels. Okay, and remember, we like to take the trade on the reclaim, and then your stop should be somewhere where you're comfortable, and you can see the movements here as they move into all these trendy edges, right? It's so cool because we know there's support here, resistance at upper trendy levels, all right? And you can just replay this. A lot to learn from here, and you can journal off of this and see how price moves through the EMA cloud, and again how it moves off the trendy edge right here. Right here, there's a lot of money to be made here. So I'm very, very excited to be introducing these, and you'll see more information on them. TradingView is extremely fast. So if you just like want to use this for that capability, but also the most important thing is we wanted to be able to showcase the edges on your phone, right, on your device, so that if you're not plugged into your screen and you just want to see these levels on your phone, you could do that from TradingView. So I'm very, very excited. We're very close to being there. If you guys have any questions, reach out to me. I can't wait to trade with you this week, and tonight I will be trading some futures as long as we get some buy and sell signals. You guys know what it looks like. I can't wait. So have a great weekend. We'll see you soon. And once again, have a blessed weekend.